Good evening. This is the Eye of the Storm podcast with the big picture for Sunday, May 21st, 2023. On tonight's big picture update, I'll be covering the SPX, the NDX, the 30-year bond, 10-year note, and 2-year note, the gold and silver markets, and also the US dollar index. But I'm going to begin here with the SPX. I've got the 4-hour chart. It continues to be a fairly active week in terms of the markets continuing to push higher as the market continues to try to embrace what is being called a relief rally, or what was being called a relief rally that began on the Speaker of the House and also White House representatives saying that a debt ceiling deal or resolution was very, very possible. Now that carried the markets higher for better part of the week. Then they were to meet again on Friday, and they did, and the one side walked out on the other side. And that started to sell the markets. And so we're now back and forth with what's going to be possible, what's not going to be possible. But the bottom line is the country and the government continue to confront the strong potential that we may default on the obligations. The government may default on its obligations as of June 1st. So they're looking to likely, I think they were going to try to meet today, or the Speaker of the House was going to get together with the president, or at least speak with the president when the president was back from the G7 meeting. You know, who knows exactly what all the givens are here. The bottom line is, for me, is that on an Elliott basis, we continue to complete an intermediate C wave and in turn, a primary B wave. It has been quite the ride. It began in October of 2022. Off of that low is where the primary B wave began. Now, let me just kind of pull this up. You can see there's primary wave A. Within primary wave B, we're going to have an intermediate A wave, an intermediate B wave, and an intermediate C wave. Within intermediate wave C, we have 5 waves of minor degree, of which 1 through 4 are now complete, and we continue to rise within minor wave 5. Now, I want to bring this down to the hourly chart for just a moment. Presently, I'm counting as clean as I think I can get and still leave open any upside possibilities. Now, what really started to happen on Friday, and it really kicked in about 11 a.m. Eastern, was selling. As sellers, because what had happened is that the meeting that was scheduled for Friday, the Republicans had walked out of, and there was all of this talk of like there's no back and forth, discussion wasn't going to be possible, et cetera, et cetera. So that kind of just sent a shiver through the market, and everyone decided to kind of move in and begin to sell. So all of our markets basically ended lower on the day on Friday. Now, what can be complete here, I can do it. It's not going to be the cleanest, but we could consider minor wave 5 complete. And that would suggest that within it, we've done minute 1, 2, 3, 4, and a 5. I believe that it counts better with that high that we saw on Thursday at 442, I'm going to say 13, completed wave 3, minute wave 3 of minor 5. And that what really transpired over Friday, and may have a little bit of continuation today as the markets reopen in Globex, a continuation of a 4th wave, with still then a 5th wave to come. Now, let's try and present both sides. The way I'm counting it right now, we should have one more rally. I'm going to go back out to the 4-hour chart, because now we're going to start to fill in the blanks as far as what Fibonacci levels are still within the realm of reality. So right now, the wave, intermediate C wave, would be 0.618 times the length of intermediate wave A at 4244, I'll call it. So it's 4243.85 to be exact. And that is still a possibility. Now let's start to fill in, again, going back down, but I'm first going to go with minor wave 5. Let's put in what the capabilities or the potential for continuation within minor wave 5 and where those levels come in. And we're going to get those by using the Elliott comparison tool, which of course is that minor wave 5 in this case, or a fifth wave has relationship to the first wave. And the first relationship comes that they are equal. So in this case, minor wave 5 would be equal in length to minor wave 1, and that level is 4278.50. So we have it right there, 100%. The second most common is that wave 5 would be 0.618 of wave 1, and that's been exceeded. That level was at 4192. So basically, that would have covered us in getting above that minor third wave, should that have completed. But we exceeded it. And actually, what is nice is that Friday's highs, let me go back down to this hourly chart so we can see it. That high that we achieved on Friday during the Globex session at 42.13 did, in fact, clear this high, which was at 41.96 or 41.95. So we have, in terms of intermediate wave C, exceeding the high of intermediate wave A, that's now been achieved. If minor wave 5 were to be complete, it also achieved that it moved above minor wave 3. So last week's little relief rallies, or whatever rally we want to call it or attached to it, it did complete two portions of this pattern up in an attempt to put a top in for primary wave B. So yes, can the market turn from here and still be all done at Friday's early Globex high at 42.13? Yes, it can. Should we only have 1, 2, and 3 done within that minor 5, then we're in a 4, and we still have one more wave up. We already see that we have resistance at 42.10, which we've exceeded. Next up on a fib basis would be 42.30 and then 42.43. Now we're going to add one more level, and that would be coming back down here. We're going to have to guesstimate that if that low, so the low that we hit also on Friday early in the session before 12 noon, we hit a low at 41.80.49. If that completed wave 4, then we have another leg that we can put in. And that would be that we're going to look to see what minute wave 5 would look like in comparison to minute wave 1. So we have, again, right there at that 0.618. So minute wave 5 would be 0.618 of minute wave 1 at 42.45, just 2 points higher than where minor wave 5 would be 0.618 of minor wave 1. So that's a very nice, strong little cluster, because we have two Fibonacci levels that fit. Now, if minute wave 5 is going to be equal to minute wave 1, we're going to be looking at 42.86. Well, minor wave 5 would be equal to minor wave 1 at 42.78. That's also a strong possibility to complete. So we may still see yet that possibility come into play. My own personal feeling is that 42.50 would be the level. And if we get to 4250 basis SPX, that's going to take care of what I'm looking for in the ES, which is where that 4250 level comes in. And that on the ES is the high for intermediate wave A of primary B. So we continue to be very close. Now, again, in both markets, and I intend to hopefully go over and also include a short Elliott Wave update, which will include the ES and the NQ as I get towards the end of this. So I'm going to try to keep this in the realm of reality in terms of time. So we have a lot of matching up to do. Now, what happens if indeed the market starts to break down? At what level would I begin to consider that minor wave 5 is complete at Friday's highs and that we're now completed primary wave B? There's plenty of news that can do that. In fact, because we're now hearing the president, before he actually left Japan, was basically making statements that the time is running well short and that maybe we should start to prepare for a very real possibility that the government will default unless some serious work can be done over the next week or so. Without any promises, he's beginning to talk about don't be counting on the 14th Amendment to be put into play, because the president now does not believe that that's going to be possible. And we may run out of time in just terms of getting a deal together, getting it to pass the House and then pass the Senate to be put into law before the deadline of June 1st. So by just sheer whatever, we may just fall into a default, and that could truly present a disaster. Now, if the market were to open today in Globex with that in mind, and we just gap lower, I want to give the level that I would believe that the market should not, and this is going to be according to the SPX. I'll try to get over and give that also in the ES. So we're all prepared for today's Globex opening. In the SPX, which we won't know until tomorrow morning, that level would be 4153.64. So let's say 4153. If it starts to break below 4153 with some push, with follow through, if it gaps through that, and then it gaps down below 4136, in fact, if it starts to gap below or it gets below 4048, it's over. The highs would be in, and the beginning of a primary C wave would be at hand. Whatever the catalyst is that's going to drive it will be firmly in place by then. So again, I have been looking for the start of a primary C wave. Its closest cousin in terms of characteristics and personality is a third wave. And third waves, as we know, can be the longest, the strongest. They can be destructive. In the case of where the market's going up, it can be destructive in that it just cuts every short to shreds. And in this case, it would cut every long to shreds. But we can't make that conclusion right now. It's out there. And I'm realizing that, yep, it is going to happen. But we may still have one more leg up to do prior to it beginning. And it may take two legs to be complete within this initial stage down within a primary C wave, which will have 5 waves of intermediate degree within it. So we will be looking for an intermediate wave 1 to begin, and we'll be looking to count that in minor degree, and then within that, minute degree. So there's going to be a lot going on. If we're counting this minor 5 in minute degree, we would look to begin with minor 1, but also in minute degree. So the internals would be of minute degree. And I still would expect it to kick in pretty quickly. So in other words, above 42, give it up, which we already did by the close. on Friday. 4,100, give it up. 4,000, give it up pretty quickly. Because what if it's going to go down because the country is teetering on default or has already gone into default, it's going to change the canvas globally. It's going to change the canvas for the bonds. It's going to change so much of what happens. It's going to be a mess, a big mess. And it will ripple across all sectors and around the globe. Now, having said all that, we get to play that every single day. I don't need to look at a big picture. I can tell you what the big picture should look like, but more importantly, we're going to get to play each segment of the move, and there'll be plenty to do and plenty of trades, swing trades, position trades, et cetera, et cetera. So I think each one of us as a trader, we're going to have to determine how we want to play this. And if you're a buy and hold or a sell and hold type of a trader, you may have some additional problems in getting a position established. Because when do you want to go in? Everybody wants to catch the ultimate top or the ultimate low. I think more realistically, we have to play it according to the price action, and you just choose your positions. You go with the flow. You go with the direction that the market intends to go. And we will already, once I am more convinced that primary B is done, I will be putting up the fibs, the initial fibs for the entire C wave. And then again, we start to break it down segment by segment, and each one will have fib retracements and support levels on the way down. So here in the S&P, we still have the possibility. Again, one other area that I can add here is I'm going to keep that one up there. And those we know match up on the 618 level and on the 100 or equality level. So we know I'm going to keep up one. I'm going to take this particular section down because we know we have that and then we have this. Now, let's take a look at where support could start to come in if wave 5 is complete. So I would begin to look at my moving averages. And right now the 20 is sitting at 4180. Then we have 4158. So you got 4160 to 4158. Then we have 4136 with the 200s. Then we have, because it was a part of that larger C wave, we have 4077 coming off. Then we have that the low of wave 4 at 4046. So those are price points coming off that should begin to follow through and provide some support. What will determine severity is the ease at which they do break or the lack of support that they give. And because of the strength of the move that I'm considering is going to begin, I would expect that those higher levels are going to be made, sliced and diced and kicked to the side, to the curb. So that would be where I think about for the NDX. Now, if wave 4 is still in progress, I want to just kind of put up those where we could look. Right now, we're kind of looking, again, 4062 down to 4058. But let's put up retracement levels, and those are going to be here to there. So what we have is retracements 382 we haven't gotten to yet. So we have 4169, 4155, and 4142. Those would be for the wave 4. But 4142 gets real close and in fact breaks minute wave 1. So therefore, 4142 out. 4155, possible, but you're going to be skirting with disaster, right? Because this high is 4154. So again, with wave 1 being as high as it is, we're really limited in what we can accept in a fourth wave. We can get down to 4160. 4154, no. So if it breaks it, we're done. That's how quickly it can show its face. If we get down to 4169 and then start to rally, that works. That works pretty well. So you're going to see this is going to be very quick. This decision, I think, could come very quickly as to if we reach the top, the high. Over in the NDX, it's even a stronger story to be told. Because again, I'm going to pop it out here to the 4-hour chart, and the NASDAQ or the NDX, it truly has been exceeding intermediate wave C, has exceeded intermediate wave A for quite some time. The whole period of time above 13,000 has completed that move for us. And we needed to count it out as clean as we could. It remains the same as with the S&P, and that we may still see one more rally. Now, what and where can it take us? So, first thing we want to do is we want to kind of go to the bottom, top. Oops, that's not right. Let me get rid of that one. Go over here and put this back on. Oops. Extensions. So we have this. Oops. I got to do this right, folks. From here to here. Over to here. Now we've got minor wave 5, which is pretty all clumped together. So that's not going to work. So we're going to take that out because we've exceeded so high that I'd have to come up with minor wave 1, 1, 2, 3, 4, 5. I'd almost have to put it up here. And this would actually have to be moving up as well. I can shift all this, but that just puts this in too high of a gear. So I'm going to go about a different way. I'm going to bring this down, oops, to the hourly chart because the rally has been so strong. I'm now going to take a look at, we haven't even gotten to a wave 4. And what I can do is go one more back down. And if I'm looking at a wave 4, because the best way I can count this is that we can only complete a minute 3 of 5. It's huge. The NASDAQ's been like on fire. Now, if indeed we're going to get a pullback here, 13,516 would be a fairly acceptable level. 516, we're talking about a 300-point drop. So in the NASDAQ, I'm going to take that away. In the NASDAQ, we may have 1, 2, and then we got this. Maybe it's 3, 4, and then you have 1, 2, 3, 4, 5, a 5. So, but I'm leaving that there for right now and suggesting that there's going to be at least one more trip up. And again, we're going to just put a guesstimate in as to where this thing could land in a wave 4. And that would be, we'd be putting that for, let's just say we put it up at the 50. And I'm even going to leave it right here at 613. We still have where we could get to 14,000 in the NASDAQ. And that would coincide should the market still goes, nope, we believe in this. So even Kashkari here, see, this is what they do. They get this news, right? This is what I just saw. It came out a few minutes ago. Fred's Kashkari open to idea of moving slow on rates, but does not support a pivot. Well, they're going to come in and try to buy the bonds because, the Fed, they're talking about they're going to slow it down. And they will immediately start to think it's a pivot. But let's just say everyone wants to go on that. We have additional numbers. And where minute wave 5 to complete minor wave 5 is going to come in. So here we have 13,965, where minute 5 equals minute 1 is 14,179. You may be thinking as I go down, they're not going to come to an agreement with this thing. Why would we be talking about these numbers? Because we've been dealing with it now for so long, and there are periods where they just ignore it. They may still decide to come in with the thought in mind that, remember, there's been a big rotation back into stocks like Apple, Amazon, Google, Meta, Microsoft, Nvidia, Netflix, etc. They're moving back in. Now, yes, we saw them sell off on Friday afternoon, but they're still up there in the stratosphere. They got Apple to close at 175. They were looking like for a while they were going to give it the good old college try for 77.5, 177.5. So, we still got all this stuff going on. And I don't know if they're done rotating out, putting stuff back together how they want it, preparing for what may end up being a recessionary period, a period of deflation, whatever. Because the concept is that tech will survive in a better position than other sectors within the market. So they'd rather be long Apple than other stocks, even in the S&P and in the Dow. And so as those index go down as a whole, maybe their index will go down less because Apple should retain more value or higher value, whatever they come up with. In any case, we do have 0.618. We have 100%, 1.618 up here in the stratosphere, which I truly do not see. Against the discussions that are at hand, against to the now even stronger possibility that we may just be pushed to default, whether it becomes political or not, I'm not even going to go there, but there's that conversation. There's a lot out there that's unsettling the market. And I'm going to start to assume that the market's got to start to react. And other than this preparing by throwing everything back into the NASDAQ, I think we're going to have to see some peeling back of positions. We'll see. So again, NASDAQ's got the same clues that the S&P, and maybe we've seen the highs. In fact, it's actually stronger in the NASDAQ than it is in the S&P. The S&P didn't reach all of the qualifiers until Friday morning. So, what's going to come outside of that, I'm not sure. In any case, here we have it. If this is all done, where this market cannot go below, 13,290. A break below that, we're done. That's 600 points. Actually, it's not quite 600. Let's call it 500 points from where we are. 500. That's how crazy this NASDAQ has gotten. That's a lot of air to let out of a market. And I believe that will start. But that's the level where we'd have to consider that the Friday's highs completed the entire primary wave B, intermediate wave C, minor wave 5. All right, so that's that market. Again, we have sailed up here. I would think we give up 13,800 right quick. We give up 13,700 right quick, 600, 500. I think we fall very quickly. If they're going to start sniffing out that, okay, we're going to default. If the bond market goes into a nasty slide, it could get real ugly. It could get real ugly real quick. So bear in mind. Now, let's move quickly over to the 30-year bond. No, you didn't like that. Okay, let's try it again. The 30-year bond, again, on the hourly chart, I've now kind of relabeled. I've put in, let's start quickly. Let's go out to the 4-hour where we can see. We had same labeling, that a minor 3, a minor 4, and we're still within that minor 5th wave down to complete an intermediate A wave, which I originally had thought maybe had finished here. But it was like doing through in the rate, the yield, that it made me see, wow, I don't think in the 30-year and the 10-year that we've reached that level yet, which would suggest we're going to do a very quick drop. Well, government defaults. It's going to be a very fast drop in the bonds. And if we take a look at the market, even down on the hourly chart, and let's just take a peek here. It did. Look at it's dropping quickly, giving up all of this high flying lower rate stuff. It's pushing it. And we did again. This was like, oh no, we're going to come to, we shouldn't have a problem coming to an agreement. Boom, they took it from 126, I think 29, 28, and ran it up to 127, 28 real quick. And then it just spent the rest of the day moving back down. Now, mind you, right on the close in that last hour, we had a lot of short covering. That could be given up on the opening today in 25 minutes. So what we got going on is could be a very quick trip down. And I truly would be looking for a low to complete the minor 5th wave down and then the intermediate A wave. So the minor 5th wave, the intermediate A below 117. Well, we have nice resistance, or excuse me, support at 115.29. And that would be, I am pretty sure it's going to line up with this, where minor wave 5 would be 0.618 of minor wave 1. So the equality comes in way below. And I am not going to say that it can't do that, because boy, I also am in the same boat as everybody else. I've not been in a market where the United States government defaulted on its obligations. I don't know. So, it would be a first for all of us. What will that produce? Will that produce a mass exodus in our bond market? No one's going to have the trust, the good faith and credit of the United States will have been blown away. What happens? Everybody wants to get out of the bonds. They don't believe in the government anymore. It's going to produce a very, very, very negative picture. And I just think it's like for everybody to put up the "it can't happen" wall tells me it's like we're not paying attention, because it could happen. And if it does, what are the ramifications? What could it be telling us? And so we're seeing a lot of the larger firms come in and start to just make adjustments to how they want to put risk on, risk off. Okay, so what I really want to do now is I want to take a look at the 30-year yield, the market yield. And I'm going to come out to the 4-hour chart, and I'm going to put the style, I'm going to put it in a line chart, which is going to help us take a look at all of this. Now, same kind of deal if I bring this out even further, and we're looking at, I can actually going to bring it out to the weekly, right? We're coming up. So this is the yield. This was, well, one more. Going to go out to that 20-year. All the way down here is where intermediate wave 5 completed, and that's coming down off of the all-time low in the yield. So this is the all-time low in the 30-year bond. That's where this rally back, this correction began. Now, initially, it really does appear to be 1, 2, 3, 4, and we have a 5. If not, then it's an A, B, C, and we still have more down. But that doesn't actually make a whole lot of sense. Other than what we're sitting in is the possibility that this is turning into a triangle, a fourth wave triangle. Now, if I even put it out there and we take a look at it on that 20-year chart, if I'm saying ABC for wave A, an intermediate wave A, and this is going to end up being an intermediate B wave, then that center part of it, right? Now I'm going to bring it back down. The center part is A, and this is A, B, C, D, E, and we flip lower. And if we flip lower, that's lower rates. So we're in a precarious type of a position. If I'm counting it out as 1, 2, 3, and this is a 4, and I'm looking for a fifth wave to complete this initial A wave up, which would then go with that fifth wave down in the bond market, well, then we're looking for levels higher. Could this still be a form of a triangle? Well, A, B, C, B, and that could be wave 4. Right, so if I put the 4 over here, and now we're starting 1, 2, we're getting going on a third. So we're going to be paying very close attention to what the yields will be telling us. And they do this on a closing basis. So that's why I rely more on the bond. And then I come back to the yield to try to determine, well, how far can it go? So let's just take this out to our daily chart, open this up a little bit, and take a look at how we're going to put this together. Again, if I'm looking for a minor fifth wave up, I'm going to compare it to the first wave, the minor first wave. And let's just go out to that 20-year chart. There is minor wave 1. Right? 1, 2. We got a 3 and a 4 and a 5. Boom. Then we get a 2. Then we get another 1, 2, 3, 4, 5, 3. It can be ABC. I'm just not counting it that way because we're not getting that lower rate scenario in even in feeling. We had it for a little bit. We had it with everything was going to come into place. And now that has changed. If they really do come in with a strong resolution and raise the debt ceiling, then we're going to see the Fed and the Treasury issue a lot of new paper. They got bills to pay. So the only way that they do that, folks, is they issue bonds. We may still be in the same boat where it's like you guys threaten to default. Who wants to come in and buy your bonds now? You're going to have to sell a whole lot of them. Who's going to come in and buy them at a lower rate? Right? I just don't think that that's going to happen. A dent is being made into the good faith and credit of the United States, in my opinion. So if we're going to go up, what is the potential? Minor wave 5 would be 0.618, the length of minor wave 1, at 4.34%. It would be equal to minor wave 1 at 4.81%. It would be equal to 1.618 times the length of wave 1 at 5.5%. No one's looking at 5.5% 30-year bond right now. What could cause that? A total bombshell just the bonds fall apart. They fall apart. And we could get there pretty quickly. So these are not unrealistic levels. I'm not necessarily looking for them. I would think 4.25, right? 4.25. Right now, we're still sitting. I think we're sitting back at 3.79, 3.8. A move to 4%? Is that really a stretch? No. 4.25? No. 4.5? No. It's not. We've been up there before. It's not. So comparing the yields now, we've got the yield story. Now we have to sit. Now we're going to find out. And we're very close on both the top in the equity market and possibly not necessarily a low in the bond market price, but maybe we're getting up to a closer to where a high in the yield is going to come in. Now, on a strictly Elliott basis, I would be looking for, and again, we're going to include all the Elliott. In the equity markets, I'm looking for a primary C wave down. That primary C wave down should be pretty destructive. But what is going to complete is a larger cycle wave A. That sets the stage for a dynamic counter-trend rally, a very dynamic counter-trend rally, one that will include a bond market that will jump and recover. So my point being on all of this is that we will have to pay the piper, so to speak. We will have to deal with whatever the Congress does or doesn't do and produces a really nasty situation that the markets will have to deal with. I think it does find resolution at some point, but how much damage will be done in that process is the unknown. What does the market really doesn't like? Uncertainty. Which market in particular really doesn't like it? Gold. We've seen them knock gold all the way down, and I think it's a perfect setup by those gold traders. Now, beyond all that, here in this yield, this is what I'm looking for. We may still dawdle around and still, we might come down to 3.5 and complete wave 4 and then rally. Now, so we still got time this week. I don't know. The bond could rally. Yields could drop. There's enough volatility around to do both sides. But default, this is where I'm looking. Above 4 in yield. Now, I can go over, let's take a peek at the 10-year note. It's going to be the same deal. This is our weekly Treasury and 10-year note. And here's what we did. We're in a 4. This is a little bit cleaner. I'm going to leave it here on this closing basis. But if let me just take it. I got to be consistent. We look at the candles, right? And that's the weekly. I'm going to bring it down to the daily, and the daily comes in even cleaner where we have, there's wave 4, minor. Here is minute 1, minute 2, and then we're coming off in a minute 3rd wave. Well, can we put up some fibs to show what the possibilities for the 10-year note are? We sure can. And we're going to do it right there. If it were to be equal to 100%, well, we've already gone beyond that. So what's coming up next? 1.618. That's 112. And that's what just minute wave 3 might be done. Now, mind you, what are we looking for? We're looking for a minor 5th wave. What should that minor 5th wave do? Well, it should put in a new low below. Well, there we have that low. So this is basis the June contract at 109. Here we have 108. That would be basis the March contract. This is the June contract. So we always have to make these adjustments for contracts because it'll roll, and this is a continuous future. So we've got to always figure that in. But 112.05, 112.050, 1.618. We've already been down. We touched this on Friday. 113.09090, actually 1110 was the low. We're not that far away. We get down to here. We're not that far away to get down to here. Look at what it's done. Bing, 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 bing. That's a daily. So the 10-year note has been declining 1, 2, 3, 4, 5, 6 days. So that going on. And then finally in the 2-year note, little different count. But we have an A, we're looking for the B. We're in the C wave, and we've just, look at this. This is really kind of interesting when you take a peek at it. I put these up for quite a while now. So the 2 years got support for the C wave. We've got it coming in at 102.148, and Friday we got as low as 102.156. So we're 7/64ths away from hitting that target. And that would just be maybe wave 3. Then we get a bounce, or maybe we already did, and we're in that bounce. And then we get a wave 5, should come and put a new low in. Still, I believe we hold above 102. We'll complete the ABC, call it a B, and then the 2-year note would be expected to rally. Bond prices rally, yields come down. So we've got all sides really playing out here. Because what the 2-year note is telling me that everything will be fine. They're going to come to an agreement. We're going to have a whole bunch of auctions to do from the 2-year, the 5-year, the 10-year, the 30-year, and Treasury notes, and all the way down to Treasury T-bills. That's all going to come in, and there's going to be a flood. My guess is going to be it's not going to produce lower rates. I think they're going to have to auction them off a little bit higher to get people to come back and participate. But we'll see. But the 2 years kind of tell me that is coming. That's going to happen, where we're going to see bond prices go up, yields come down. It's going to be interesting. Going to be interesting. All right, let's go over and take a look at gold. Gold just turned on its nose. Now, on an Elliott basis, it's really okay. It's a second wave. It's a small second wave, but not really when it has fallen nearly 150 points or so by the time it finishes. But if I just stick with my count, this is the daily, where we're in a minor fifth wave up. We finished minute 1 and 2, and then minute 3 is subdividing. And so far we've done wave 1, minuet wave 1, and we're in minuet wave 2. And it projects down to 1948 all the way. It could go down to 1915, 1916. It can get there. And I would suspect that we're at least going to make one more new low. If this is A, B, and that's 1, 2, 3, 4, we get a 5. Maybe it just gets below 1948. Doesn't have to necessarily come all the way down. Gets in, puts a new low, and then starts to rally again. Remember, gold hates uncertainty. So, and also a higher dollar. Doesn't like a higher dollar either. So a whole bunch of stuff can really knock it down. And it was the dollar last week that knocked this thing right out of the sky and dragged it down. So we continue to see that, and we can go all the way down to 1915, 16. We can come all the way back. We don't want it. I don't want it to be going below 1810. And I believe I probably need to raise that up a little bit. I just do not, because then it just takes the whole count, leaves this as a very nasty looking 3 waves. And then again, we're just probably still in the 4 or some other, and then we'll take a look at it then. But so I'm looking for gold probably to finish up a correction and then start to rally. I would expect in the default it's going to rally pretty hard, rally very, very, very strongly, I would think. Now, silver, same shebang. Comes off in a 1 and a 2. There's minute wave 1 of a minor third. Beautiful, nice, beautiful wave. And same deal. We got up to 26, almost 26 and a half. Bam. We're driving it right back to 23.5. It rallies into Friday's close. I would think it still looks like it needs more downside. It looks like it's going to play out more to the downside. Here are support levels, 23.19. We've got the 200 at 22.96. Then we have 22.42. We've got the SMA, the 200 SMA at 22.23. And then we have 21.86. I do not necessarily want to see it below there. Back to 19 presents a very unhealthy picture for silver right now. I do think that there continue to be some strong upside. I believe that the underpinnings for both gold and silver remain strong. So I'm looking at these as corrective versus the uptrend still in force. And then lastly over here, let's take a look at the dollar index. Using still, but at least now what I've done is I put the B wave here. And I put the A and the B, and now we're in the C wave. So here is the possibilities. I put parentheses, let me start over. I put parentheses around this B wave because that's the alternate count right now, that the B wave is complete, and this is one coming off of a C wave, of a minor degree C wave. Wave 1, ABC, wave 2. Yikes, yikes, folks. Dollar did pretty good last week in terms of going up if you like a long dollar. If this is the alternate count and this is minute 1, ABC minute 2, minute 3 is going to be ugly, and it will break 100. Now, let's just toss out a fib, right? If we're thinking that this is for the upside, so we still have that potential, A, B, and we're in a C, except this is very suspect. This pattern is very, very suspect right now. I don't like it. This is clean, but this isn't. I got to call that a 1 and a 2, and this is going to be a 3 coming up. Not pretty. ABC fits a lot cleaner, which suggests downside. So if that is the case, and this is wave B, then what I'm going to put up is I'm going to, just for the sake of it, I'm going to take this one down, which gave us those resistance levels, right? Gone. Now we're going to put in, what if we're looking for wave C? Well, here you have it, folks. Wave C would be equal to wave A at 91.92, 91.92. Wave C would be 0.618 of wave A at 97.25. So just to come down and just get itself below that B wave or that A wave, we're still looking at 100.55. So I think if we are in this C wave coming off and we're in a larger intermediate C wave, not going to be pretty. So right now we're focusing, we're going to move a little bit lower here, but in pretty much, I'm looking at the S&P, close at 98.25, 93 bids. So it's not really in a gap. Not going to see we got any big gaps coming. In fact, gold a little bit off. Here you have it. Here you have it. Russell actually going to be up. The Dow actually quoted higher. So that's where we're going to leave this. I'm going to tack onto this. Let's just take a look at the S&P. Here we have, this is the futures market. Now, once again, what did we do? We come up, we finished the 3, we got a 4. If it opens at 92, we're just coming below, still not even below Friday morning's low. But we have room. We can get down to 79. We just cannot cross that one, 72. I don't want to see it below 72, then the three's out. So we really can't really fall all that much. And right now it's not. Right now, if they can get it and hold it, we're about 20 points away from that. And that would be healthy. What do we have on upside? Well, we still have that nasty A wave at 42.50. Well, we got up to 42.31. Okay, we're starting down 15. NASDAQ down 52, now bouncing back just as quick and now moving all over the board. So we're not really going to be bopping around, still within the realm of reality here. So no gap. Hope is still alive. We still have upside. We have 42.28. That was the previous high that we saw on Friday. Then we have 45 to 54. That takes us above the A wave. Yay. And then above that, we have minor wave 5 equaling minor wave 1 at 42.95. So we have some really, I'm going to take this out because it's just kind of getting a little messy in there. And what I want to do is we have, that would be for the minor fifth wave, right? So we got 618, and that would be for this larger C wave. All right, there's the B. We're looking at the C. 3, 4, 1, 2, 3. Finishing our 4. Cannot go below 72. We'll keep a monitor on that. So I'm quickly giving you guys the update, the Elliott Wave update along with it today. So I'm not going to keep us all very much longer. We could take a look at the bond market. Bond market opens up a little bit higher. So got all this relief, got all this. Don't fret yet. We're going to trust the boys in Washington to get their job, boys and girls, get their job done. And so we're leaving upside. We're leaving upside potential in our indexes, in the ES and in the NASDAQ. 42.54 to 42.95.96. And with a true powerhouse, we can get up to 4,300. Just saying. Not saying that that's what's going to happen, but it's not that far of a stretch if we get to 42.96. Now, is it? We shall see. Again, NASDAQ. We are in, that's my daily. I got to bring it down. Let's take it down to the hourly chart. Let's try to open this up. It's been one heck of a rally. I need to correct this. This needs to come over. Yeah, I got to move that. That's got to come over here. And this 4 is going to go way up here. And this is all part of that 3. Unfortunately, I'm going to have to, it has to equal, of course, the NDX. So we're leaving that high there. And so what we're doing here is, now we got to open this back the other way. Come on, get out of my way. All right, so this one is going to come up. And it's actually going to come 1, 2, 3, 4, 5. I'm going to put it right there. And I'm going to, oops. I'm going to put the wave 2 over here. Kind of. And now we're going to look at where this, I'm not sure what this is. I put it up in the wrong place. Let's just get rid of that. And now we're going to get some different numbers here. So I think I put it where it would come all the way up to that minute one went up to here. And it could, but I'm going to let that be for right now. 1, 2, 1, 2, 3, 4, 5. Yeah, I may change it, but we're just giving an estimate now, and we'll see what we get. Oops, don't like that. Come on. There, and it's not doing it. Let me open this up a little bit more. And we want to go from there. Add the drawing, add that. Good. And we're going to go up to the top, and then we're going to go way over here to this 4, as if it just did it right here. So what we're really looking at is, we're looking for the NASDAQ to get itself above 14,000, just above, actually. Equality, if indeed this is finishing the wave 1, equality is 14,025. 0.618, just actually cruises up to that high. We got up to 50, or I think maybe it was 60, 13,960. That was on Friday. And this 618 is 13,940. So it'd be a little bit of a failure. But if we can get up to here, that's still a failure. So we'd still be looking for it to at least get up to 975 to put in a new high above wave 3. So therefore, we have 14,000, 14,025. Those are the numbers for the NASDAQ future. And it would also, anything up here completes all of this, by the way. So I'm going to end all this. So what we've done today is we've done the big picture update, and I'm tacking on a quick Elliott Wave update for the NASDAQ future and the S&P future and the bonds. Bonds are now putting in a nice little rally here, just maybe its own little relief rally. And we're going to let that be for what it is. The next update will be on Monday, the 22nd, and it'll be an Elliott Wave update.